Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and today I'm going to talk to you about what you're probably hearing now is about this Bitcoin halving, and I'm going to talk about, all they talk about is Bitcoin, but they don't ever give you the context of, what has happened historically with these Bitcoin halvings where it doesn't relate to Bitcoin, because until now, really all the way up until now, the entire market has kind of followed Bitcoin. Now, this will change over time as more and more of the people in the real world understand that Bitcoin has no use case other than being a store of value. As these other digital assets, such as the greatest digital asset ever created, XRP, as the utility really begins, there will be a separation created. But let's just look at history, taking that out of the equation, what has happened in the past. But first, I found what I think is a great video that gives you a good idea of what Bitcoin halving means. And I wanted to show you what you're looking at here is Google Trends. The search for, and this is the type of thing that creates bull runs is when you start to see search spikes because of a certain event like this. But I'm going to show you a video that kind of explains to you what Bitcoin halving means. And this was a video that I found that was on CoinDesk's website. They had put together, and remember, these guys are pretty Bitcoin maxi-ish themselves, and so they're big time into the Bitcoin thing. But listen to this, and then I'm going to open it up here.
Money is just like everything else. Its value depends on its supply, how much there is, and its demand, how much people want it. Governments can create money at any time. Usually, central banks meet every few months to decide whether to adjust the money supply. But if a situation seems urgent, they can ramp things up immediately, as we recently saw during the coronavirus crisis. Bitcoin, on the other hand, doesn't have banks, or boards, or anyone in charge. So how then does it decide how much money to print? Through a process known as halving. Back in 2008, Satoshi Nakamoto, the creator of Bitcoin, had an idea. What if you took humans out of the financial equation entirely and created new money on a schedule that would last more than 100 years? It would be boring, predictable, and let people trust the system since they could make very long-term plans with confidence and without the need to worry about sudden or unexpected changes. But for Bitcoin to be valuable, it needed to be scarce, like gold. Nakamoto set the maximum number of Bitcoin to 21 million, so Bitcoin would be limited in supply, and thanks to the halvings, it would have a long, predictable, and unchangeable release rate. But how does it work? First, let's explore the process of mining. Think of it like a raffle that has one winner every 10 minutes, where miners generate a new raffle ticket for each math problem they complete and turn in. In the early days, computers weren't optimized to create these tickets, so each Bitcoin miner generated fewer raffle tickets for each contest. Anybody could use their own computer to do it, and many did. Now, in 2020, there are specialized computers to do the mining, and companies that fill enormous warehouses with these machines, in parts of the world where electricity is relatively cheap. And every 10 minutes, one lucky miner wins, and new Bitcoins are given to them as the prize. In the early days, when Bitcoin had no real value, the protocol gave away 50 Bitcoins every 10 minutes. At today's prices, that'd be worth at least $250,000, but back then it was worth less than 50 cents. As time passed, that number went down, with reward halvings every 4 years. In the first halving, from 50 to 25 in 2012, the price of Bitcoin rose from $2 to about $270. In 2016, it rose to about $700 and kept increasing until the Great Bubble of 2017 and 2018. The next halving, to 6.25 Bitcoin, may or may not show similar performance. The halving reduces the number of Bitcoin you can win, but the number of raffle tickets entered in each contest has gone up and up. For miners, it's worth playing the game because even as the number of Bitcoin has gone down, their value on the market has risen. So then, the halving is the slow, predictable, long-term process of reducing new Bitcoin given away on the path towards eventually not needing to create any new Bitcoin at all. Over the years, we've seen competition amongst miners go up and up, which attracts even more miners eager for a payday who make the Bitcoin network even more secure. How much higher could the price go after the next halving? Really, there's no telling. Some traders expect big things, maybe six-figure Bitcoin, while others believe the market, long aware of the predictable halving schedule, has already priced this in. Another open question for the decades ahead is whether miners will have enough incentive to keep doing what they do as the every 10 minutes reward keeps tapering off. Remember, miners need to be paid. They're not running these expensive electricity-guzzling computers for their health after all. So unless the price of Bitcoin keeps rising, collecting fewer Bitcoins for their work means miners will have to demand ever higher transaction fees from users, and that could make the system more expensive for transferring value. In the end, the halving happens as regularly as clockwork, and whatever the final outcome, it's a fascinating peek into the rules that drive this new economy and one of the most innovative experiments in the world of blockchain today.
Okay, so I thought that was pretty darn interesting, but I wanted to show you that, and I hope that the music on that does not cause this me to have to take that out. Maybe I'll get lucky. But what I wanted to show you, there was a chart in that video, and by the way, if for some reason the video has to be cut out or whatever, I don't think it will, but I'll just let this thing not be monetized or whatever. But anyway, moving along. I wanted to show you a chart that was in that video that shows you when the halvings have taken place. The Bitcoin halving price runs up. So right here, November 28th, 2012 was the first halving, and then July 9th, 2016 was the second halving. Well, all they're telling you about is Bitcoin here, okay? So I decided to go back and look at what happened in the year following these halvings, what happened with the prices of both Bitcoin and XRP. The first thing you need to understand is in November 28th of 2012 through 2013, Bitcoin had all of the name recognition. Nobody knew, people barely even knew there were altcoins, and XRP was just showing up on the scenes. And that will be reflected in what you see in the percentage gains in this scenario. But I wanted to show you, this is the historical data. Now, they didn't have historical data that went any further back. This starts, the halving, like I just showed you, was on November the 28th, 2012. The prices only go from August 4th of 2013. So I took them for both of these all the way through. You'll see XRP was at $0.005, and then by November 29th, 2013, it was at 0.03. And I will give you the percentage gain here in a second. First, I wanted to show you Bitcoin for that same time period. I believe it was August. I took it from August 4th because they had a little more history on Bitcoin. Took it from August 4th, this 105.14, all the way to November 29th. It was 1,131. All this occurred after the halving. You'll see XRP, which had just come on the scene, gained 410%. Bitcoin over doubled that with 976% gains after that first halving. But again, remember, Bitcoin, there was no name recognition with XRP. It was so brand new on the scene, it really doesn't give you a good indication of how things go down. Now, so now we're going to the next halving, which is July 9th, 2016. So I went and looked. This is on CoinMarketCap, by the way. So July the 9th, 2016, the XRP price was $0.006. And then within 1 year from that was when the halving happened. A year later, it was at 20 cents. Bitcoin, same thing on July the 9th. I can get all the way down here. All right. July the 9th, Bitcoin was at $650.96. And at the end of a year from that halving, it was at 2,372. So here are the results for the two digital assets for that second halving. So all the Bitcoin talk that you're hearing about the Bitcoin halving, here in the second halving, when XRP still doesn't have the Bitcoin name recognition, but look what happened in terms of gains. Bitcoin up 264% a year after that halving. XRP up 3,233%. Okay. And I'm just telling you, psychologically, people look at these digital assets that they can buy more of, and they see themselves. And I'm telling you this because that's how I saw myself when I got in this. I was looking at these things and hearing about all these Bitcoin millionaires, and I'm like, well, if they created this thing and it went to these crazy amounts as being the first one, there had to be others. That's how I started my journey. That's how a lot of average investors are. When this market starts taking on, you're going to see them pile in, and they're going to have that same thought pattern. So anyway, I wanted to finish this up to drive the point home. Go to XRParcade.com. This gain for XRP that you're looking at from July 2016 to 17, there was nothing going on for Ripple and XRP compared to what has gone on since the 2017 bull run until now. Now we have real things going on, real business applications. XRP is really being used commercially in finance. Real things have happened. When the next thing goes off, this, in my opinion, could be peanuts. And if you don't believe me about the progress, go to XRP Arcade. This is Leonidas's website, XRParcade.com. Go through all of his different, look at the XRP ecosystem, look at the different wallets, look at the pairs on all these different exchanges that are here that didn't exist before the 2017 bull run. Go and look at Ripple's ecosystem, the top 100 banks in Ripple, which ones they're partnered with. Go look at Ripple's Twitter feed. Go look at the on-demand liquidity exchanges. Go look at Ripple's escrow. Go and study all of these things. Go look at the events that Ripple's going to. This is completely different than what it was. And I believe that when all of this happens, Bitcoin's going to be left in the dust. Here in my part of the country, we have a lot of country roads. A lot of people hunt and fish and that type of thing. And you can go down a country road and you know what the saying means to be left in the dust when you go down those country roads, because there's dust everywhere. I believe Bitcoin on the next run will be left in the dust for good by XRP, the greatest digital asset ever created. Now, I want to keep focused on this. A second round of the current events layoffs has begun. Few are safe. I think we have more job losses now than we had in the Great Depression, folks. It's really scary times. Now, I'm going to keep reminding you, if you've lost your job and you have a 401k, it's not just 401k, 403b, TSP, 457. I don't even know what those are, but iTrustCapital, which is in the description of all of my videos, and there's a coupon code in there, is the most inexpensive way to roll some or part of a 401k if you lose your job into an IRA where you can invest in digital assets like XRP and Bitcoin if that's your thing. Go look in the description of my video. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe and hit the like button and tell your friends and family that the Bitcoin halving, it does not just mean good things can happen for Bitcoin. Even better things can happen for XRP. Thank you for listening.